Hi everyone, I'm Rick Bensignor. Today is Tuesday, November 3rd, Election Day, and you're listening to this week's In the Know Trader Show. This week for our agenda, we're going to start off by talking about how to define a test of a prior high or low. This is something, it's a word commonly used. You'll hear it all the time on business television and StockCharts videos and webinars by people talking about, we tested the high, we tested the low. And I think it's a very loosely used word, and it's not really, you won't find in any textbook on technical analysis what a test is. So I've kind of defined it and come up with, I think, a very practical way of looking at something to really understand if something tested or not. So we will talk about that. We will do our market overview this week. We'll look at the NASDAQ via the QQQ ETF. We'll look at gold and the US 10-year. When we talk about the 10-year, that is the benchmark interest rate in the US. It's up again today. In fact, everything's up on a kind of risk-on day. The S&P is up 2.25% right now. That's about 75 points. The NASDAQ is up 2.2% or so. The Dow is up 2.44, so it's actually leading. And let's take a look. Where is the Russell's up 2%. So it's actually trailing today. 10-year interest rates, well, what do we have? Let's look at this in basis points. 89 basis points. That's up 4 basis points on the day. And that's the highest level we've seen in quite some time. Crude oil has dramatically risen in the last 2 days after getting crushed last week. It's done a complete turnaround and gone right back up. So we're at 37.70 on December oil. And what else? The dollar is getting whacked today, down 77 pips at 93.35. So, of course, that's helping the precious metals. Gold is up $15 as we speak at 1907.5. Copper is up about 3 cents today, just shy of $3.11 a pound on COMEX, and silver is up about 26 cents, a little over 1% at 24.30. So that's our look at what's going on in the market. So we'll review these more in depth, and then we will look at the communication services sector this week. This has been one of the leading sectors to the S&P this year, and we'll take a look at about 10 names or so, the large cap names that are driving this index. So you'll see names very familiar to you: Google, Facebook, Twitter, Verizon, AT&T, T-Mobile, Comcast, Charter, Disney, and Netflix. So that'll make up our show for the week. So let's start in our little trader education portion and get a little more into what it is about defining a test of a prior high or low. So let's move to some charts. And here I've got the QQQ. So that, of course, is the NASDAQ 100 tracking ETF, one of the most popularly traded of all securities. Spiders, of course, are number one, and I'd venture a good guess that QQQ is probably the second most popular traded equity ETF every day of the year. So if we look at the high from September, which is the all-time high here, let's get this more, maybe we can get this into a pointer. All right, so here's the all-time high. We sell off into the September low. We then come back and we don't get to the high. So, a lot of people would say, no, we didn't test the high. And then we sold off for a couple of weeks. And then we seemed to bottom on last Thursday, Friday. Or no, I guess that's Friday. And then yesterday, kind of double low. Then we're moving up strongly today, but we didn't get down to the low. So most people would say, no, this did not test. Let's look at something like the Russell. Looking at IWM. Well, in August, we made the high for the move, but certainly not the all-time high or close to it. Sold off, and then we made a higher high. So we certainly tested and exceeded the highs. And then the sell-off that we had over the last couple of weeks, this was much stronger than the QQQ because it didn't fall nearly as much, and it didn't come anything close to the lows of September. Let's look at, let's say, the Dow. Dow made its high here. sold off, came back, kind of got close to the, near the highs, then exceeded the lows from September last week all the way to just, simply turn around again. So that certainly tested the lows. And let's look at the S&P. S&P didn't quite get to the September high, sold off, didn't quite get to the September low. Now we're back to mid-range. So the question is, did these test? We looked at 4 major indices here. The NASDAQ, the Russell, the Dow, and the S&P, right? So these are the 4 major indices in the US. A couple look like they might have tested, but what creates a test? So again, there's nothing that I recall ever seeing in 40 years of doing this that has defined what a test is. And yet we hear it all the time. And we hear, in fact, a misuse of the word. We often hear the term a retest. So if the market made a high here, sells off, rallies, and come back, many people, like you'll hear on TV, they'll say we're retesting the low. I'd say, well, you're not retesting it, you're testing it. Retesting would be if you did it even another time. So I'll tell you how I define this. And I think it's a good way to look at markets and understand market movement so you have a better sense of, for instance, here looking at the S&Ps, last week we got down to 32.34, but the low in September was 32.09. So it's 24 points. That's about 2/3%. Was that a test or not of the low? And the answer to me is yes, it was. More so that here on the peak in October, this also tested the highs. So here's the minimum thing I'll look at. If I have my high price here in early September, I'm going to look at the day that makes the range of the day that makes the extreme move. In this case, it's September 2nd was the high of the move. But because we gapped up that day, I'm actually going to take, let's draw this line. I'm actually going to take the closing price, or what would be called the true low of September 2nd was actually the closing price of the day before, because there's a gap. So I'm going to say that the low of the day that made the high was here. I'm also going to look at the lowest low of the move. And we're going to look at the high of that day and draw a line. So to me, if you rally and get into the range of the day that made the high, you've tested the high. You don't have to test the actual high. You don't have to necessarily even test the close. To me, if you get within the day's range of the day that made a high, you've tested the high. So to me, the October high was a successful test of what was the all-time high. The sell-off, and by the way, on this day, we happen to have, for those of you who've been following my work for a while, or if you're in the No Trader Tactical Trader report client, you know that this day was an upside exhaustion signal. So to me, having an upside exhaustion signal when I'm testing the high is enough for me, certainly not to be buying stock at that point. It would suggest sideways to lower. We sell off for a couple weeks, and right away I said that this will likely lead to a test of the September low. And to me, that occurred last week because we got beneath the high of the day that made the low. So we got into that zone. In fact, I could, let's say, I draw these. You can see I can create a zone of where a test is. So it can go anywhere from the low of the day that made the high to the high of the day that made the high. And if we come to the downside, you minimally have to get to the high of the day that made the low, all the way down to the low that made the low. Anything in there is a test. If I trade lower, like the Russell did, no, not the Russell, I think it was the Qs. No, the Dow. So in this case, the Dow only had to get as low as this line, the high of the day that made the low, to say we tested that September low. And anywhere in here, in that zone, this zone in here is a test. So we certainly tested, there's no question if we tested the low, because we actually went beneath the low. Just to turn around again, but we went beneath the low. On the upside here, similar type thing. There was a gap into the day. In fact, I take it even back. Look, in the case of the Dow, it was September 3rd that made the high, whereas the other ones had made it September 2nd. So if I look at the range of that day, and that was obviously a huge reversal down day, all I have to do in the future is come back above this level to say I've tested the high. And anything in that zone, to me, is a test. So that's how I look at things. And you can do this for, it doesn't have to be the broad indices. It can be anything that you want to look at to kind of get a sense of if you've tested something. So in the case of, let's say, the S&P, when last week we got down, when I wrote my report to institutional clients on Sunday, I said that we have already tested the low of September, which was what my goal was when we made this high and we had the upside exhaustion signals. My commentary was we will likely be sideways to lower into elections and test the September low. So we don't have to go all the way down to that very low price of 32.09. All we have to do is get in the range. Now, that's how I kind of take this idea of what creates a test. And it's important to know, because if you're hanging on for that last little, penny or whatever it is to go, oh, we didn't go here, you could easily miss an up move. So if there's any other reason that you would be considering being a buyer, then to me, you've already reached into the zone you needed to. You don't have to get to the extreme price. So that's how I look at a test. Now, there's one other thing I want to tell you, and let me see if I see an example on this chart. I don't. Let me just pick something else. I don't know. I'll just go through a few different names and just looking for something. I'll tell you when I see it. What I'm trying to find is a higher low that has a very small range. No, it's not that small. The idea here, let me just see if I can make an example of something, even though it wasn't. So in this case right here, let's say, no, that's not a good example. These all have large. Interesting. It's funny when you're looking for an example of something. You can't. All right, here's GLD, gold. So according to what I'm saying, the day that made the high to test it, well, here we have a gap, so it's actually going to be larger than I wanted to use as an example. But here, let's say this day did not gap. Okay, so this is just for educational purposes. There was no gap here, so the low was here. This was a fairly small range day compared to, looks like, what was average. So many times, because you have a small range day at the extreme of a move, you may not get to that small range. And what I'll often do then is look at, when I have a smaller than normal range at the extreme of a move, I'll take the range itself, which in this case is, what we got, I don't know, $1.80-ish, give or take. And I'll kind of add a dollar, or let's better said, subtract $1.80 from the downside and add $1.80 to the upside. So I'm actually expanding that whole day's range because it was so small, and I'll actually take out the actual range of the day, and I give it an expanded range because let's say it had a very small range to start itself. So I would say anything into the, I'd measure it more precisely, but anything into this area would be a test of the high. So that's the only caveat I use, is that if the transitional day is a small range compared to normal, I'll extend the range by the price of the range itself. I'll add it to itself and I'll subtract it to itself. So, recently, let's say even over the last 4 days, to me, GLD tested the lows. Doesn't have to get down to the lowest price of 173.77. All it has to do is get into anything lower than that level, the high of the day that made the low, and you're inside. That's a successful test. So gold tested the low from September. It's starting to move up. Now, I can still draw downtrend lines and other things, but purely as far as a test, to me, this is a much more objective way of measuring if something made a test or not. So that's today's lesson. Hope it's helpful for you. Let's go back to doing our market overview. So we're going to start off with, actually before we get there, just got to do this every week, remind you that we have 2 newsletters that In the Know Trader publishes. Wednesday nights is the weekly ETF Technical Trader Report. And this focuses on one new ETF idea per week and keeps track of all the other open positions we have until we close them out. Plus, it reviews in depth the S&P, and then a combination of some of these, which would include gold, bonds, and the dollar. And then our monthly report, which just came out also this weekend because it was the beginning of the month, is our 7-11 report. This is geared on more medium to longer term investing to beat the returns of the S&P. It takes minimal work on your side to reallocate as we need to, but the goal here is to beat the S&P over time by staying out of the underperformers. And we still remain, after 3 months into it, we're still outperforming the S&P since we started August 1st. And any one of those are available through intheknowtrader.com to write me emails like you guys do each week. It's rick@intheknowtrader.com. All right, let's take a look at the markets week over week. So on the right-hand side, notice that 2 of the 11 SPDR ETFs underperformed in the last week relative to the S&P by more than 1%. Consumer discretionary and technology were the 2 sectors that underperformed. And notice that there's 1, 2, 3, 4, 5, 6, 7 that beat the S&P by a week. I'm sorry, not by a week, by 1% or more in the last week. And what you see here are a fair amount of them are towards the right-hand side, which often just by chance have been the trailers this year. So real estate picked up over 1%, financials picked up, utilities are less bad compared to where they had been, healthcare is less bad to where it had been, energy, which was down 55% just I think a week ago, is now only down 52%. I'm still getting your investments are getting crushed being in energy, but they did outperform last week. Materials outperformed last week. You can see they went from negative to positive, so they picked up over 400 basis points of performance. And industrials are less bad. And so what we do in our report for the 7-11 is we try to stay in and figure out which ones are in transition. And look, technology was up about 30% earlier this year versus the S&P. It's now only up 18.5%. So it's come well in, but it's still the #1 performer of the year. But certainly there's been a decrease in how much it's outperformed. And you know what we do, we put together a 35-page report or so every month and give you all the information you need to know on how to allocate and play sector versus sector. If on your own you want to be, let's say you wanted to be, the home run trade of this year was obviously if you were long technology and short energy, you know, you just crushed market returns. So we give you all the help on looking at sector versus sector, as well as, of course, I allocate a let's call it a mock portfolio of exactly how to allocate across anywhere from 5 to 7 SPDR ETFs that will hold at any one time to outperform the S&P. All right, let's look at some charts now. Let's go and take a look at, what do we say, NASDAQ? Do I have Qs here? Let's see. Nope, so I'm just gonna, let's do, and all right, so here's a quick look at the QQQs. All right, so double top, we already here, take a look. What's the low of the day that made the high? Right here. So back in October, yes, we just tested the high. And now, did we test the lows? Well, here's the low, here's the lowest low. So let's go to the high. And yes, last week tested the low. So we tested the high, we tested the low, we're sideways in a trading pattern. And now the market's starting to come back. We broke beneath the cloud. The lagging line did not break beneath the cloud. So this is kind of a caution signal that things may be changing, but if the lagging line doesn't break, it's not, you don't have a full trend change. So this is sideways market. If I put up something like an RSI, it probably, let's see, didn't get, well, we got down to not enough to be officially oversold. But I'm looking at this as a trading range, so I'm still going to use weakness and new strength to, you know, play the range. Now, you've got elections today, so I'm not suggesting you do anything today or tomorrow until we know for sure who is actually the winner. But the market is showing you that it's, based on the price action right now, it is not anticipating a contested election, which potentially means that people think Biden is enough ahead in the polls that Trump will not be able to contest. What I've been telling people is I figure if Biden wins by 7% or more, which is a pretty significant win, Trump would not contest. If it's, you know, anything near like 3% or less, I think Trump will contest, and that's kind of the worst thing that the market wants is uncertainty. So depending upon what comes out tonight and how Trump plays this and announces what he's doing, I think, you know, you could still see sharp moves in the market. But otherwise, that just looking at the market bounce, what it's kind of telling you that it's not anticipating a contested election right now, which I think suggests that the bulk of investors are thinking that Biden will win this, but we'll see tonight. We'll see. Let's look at the U.S. 10-year. Where do I have TNX? Here we go, down here at the bottom. All right, so we've been bullish since we got the breakout above 74.5 basis points. This is in TNX terms, so that's going to show up as 7.45, but that's the same thing as 74.5 basis points. And you can see we're on a 10 count towards a 13. Our target's been 93.8 to 97.7. These two targets are active. So anything here, let's just kind of create a little rectangle. So I'd say the target for this move is essentially in here in yellow. Doesn't mean it can't go higher, but if you were playing for a short-term move over a month or a little more to buy the breakout in yields, which actually means selling bonds, unless you're trading an inverse ETF, playing for yields to get into the mid to high 90s, and then that's the point at which we figure out what to do next. But that to me was the initial trade, and all I tried to do is get for the breakout and then sell it into this. If we look at the day that made the highest high, obviously the high was up at 126 basis points or so back in March. You look at the low that day, kind of, let's see, did they cross 997, 999? So 997 would be the true low of that day. So anything above there is a test. So you can see we're all getting very close to the test of the highs made in March. Whereas most people, right, you're going to look at this and you're going to say, well, you're not testing the March highs until you get to 125 or 126. And what I'm saying is anything above 99 is actually a test because you're within the range of the day that created the high. All right, and lastly, we'll take a look at the dollar. All right, so the dollar is still above long-term uptrend line. This goes all the way back to 2011. It bottomed on a setup 9. We've been going back and forth in between since. You do have a bullish crossover. The dollar's off strongly today, but it is still holding long-term support. If it breaks there, I think this level, 87.42-ish, comes into play in 2021, and I do believe that's likely to happen. I will find places to sell into this rally in the dollar, especially if they get above here, because then you're going to have a lot of shorts getting stopped out. So I probably use strength back up into the mid to higher 90s to get short, and then a whole nother wave down. I do think the dollar is going lower. So I'm actually going to delay the communication services going through the charts until next week, because we're down to just over, I don't know, a minute or two remaining. So it doesn't make sense to go into those. We're just not going to, it'll be not enough in depth. We'll only get to 1 or 2 charts, so it doesn't make sense. So let's see if there's anything else worth taking a look at. Take a look at, we looked at this recently. Here's the energy ETF XLE. And a couple days ago, it got a 13 for downside exhaustion. We're coming right back to the trend line. This is real time as we record, so it's trading 29.74 right now, playing with this trend line. If we get a down close today relative to yesterday, so yesterday closed at 29.70, if today happens to close lower, and then tomorrow we close above this trend line, then you look for a move up to 33.60, and that's almost 10%. So that's something that I'm kind of eyeing here, especially with energy having been such an underperformer, and the fact that oil just bounced again quickly. And of course, oil XLE has been selling off, even with oil having been at $40 for 2 to 3 months already. But the fact that we have a downside exhaustion signal here now and the market holding up would suggest to me that, here's a possible play of just something to look at, and, for energy stocks to potentially get a little more bounce to them. So that's it for this week. I hope you enjoyed the show, and especially what we focused on and how to understand if we've tested a high or low. And that's it for the week. I'm Rick Bensignor, and this has been In the Know Trader.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.